What is going on, everybody? It's Pat, and we are back with our next video. Today, we are going to go over the top 10 trading tips that every trader needs to know to be successful. Number 1, backtest a strategy before you implement it and make sure it has a positive win rate. Now, I'm going to show you what it means to backtest a strategy. Say your strategy is every time that price hits this bottom ATR band, you enter along. So you're going to come back here and you're going to look at the price and you're going to check every single time that price hits this bottom ATR band. Now, did it produce a winning trade every single time? Now what you're going to do is you're going to total up every time. You're going to say, okay, this one, that was a winning trade. This one, that was a winning trade. This one, it wasn't. This one, it wasn't. So you're going to total it up. No matter what your strategy is, this is how you backtest it. You look into the price history, you total up the numbers of wins and losses, and you want to see at least a 50% win rate. Now, number 2, you develop your own trading style using a combination of popular methods. This will be your edge on the market. This will be how you win trades, and nobody can quite duplicate it because it's your own combination of all the popular methods. Now, for example, you could use like Elliott waves with Wyckoff and smart money concepts. And when you use them together, it'll help you get confluence on the areas of interest. So it gives you more confidence in your levels when you have more confluence. So you pick whichever trading styles and whichever strategies you like the best and use a combination of them. You'll develop your own combination for whichever works best. Now, I'm going to show you a quick example of this. For me personally, I say Wyckoff and Elliott waves because those are two of my favorites. Now, what I like to do, say we have this distribution here. I want to know where it's going to end up going. So what I like to do is I use Elliott waves to determine the targets. So say you have wave 1, 2,
3, 4, and now I want to know where wave 5 is going to end up.
So I would use my Elliott wave strategy to figure out what the targets are. In this case, they're down here. So I would expect a bounce back up, which also matches up with the LPSY on the distribution. So that gives me more confluence because I know we need a wave 4 and we also need the LPSY, and it's going to come up into the same place. And then I know that wave 5 is going to end up down here in this area. That's just an example. You can take any amount of popular strategies that are out there and combine them any way you see fit, whatever works best for you, and then make sure to backtest it. Now, number 3, this is probably one of the most important ones. You need to learn to control your emotions. You need to trade like a robot. Once you have a set strategy, you stick to it no matter what. When your criteria is met, you enter the trade. Use your predetermined invalidation point and your take profit levels. When you set a stop loss, you never move it. It's there for a reason. Don't allow your emotions to control your trading. Follow your rules and only trade your levels, and then never stray from your strategy that you backtested. Okay, so let's move on to number 4. You need to be patient with your trades. Sometimes the difference between a winner and a loser is just a couple minutes of patience. You have an invalidation point for a reason, and you have take profit levels for a reason. You don't enter and exit trades prematurely. Let them play out. I see too many times people start flopping and groping with their trades. It goes a little bit against them, they close it, and then it bounces back, and it would have been a winner if they had just waited. So be patient with your trades and have faith in your levels. That brings me to number 5. Never trade without a plan in place. And it should include your take profit levels and your invalidation point. Too many times I see people who market order into stupid trades because they see the market going up and they want to catch the move. But every time they do this, the market reverses against them and they get liquidated. I really can't stress it enough. You only play from your levels and you never allow the market to determine your fate. Don't leave things to chance. You make your plan and you stick to it. Now, number 6 goes hand in hand with that. We're going to talk about risk management. So what you want to do is you want to make your losses so small that you can lose 5 trades in a row and make it all back in one. So you accomplish this with effective risk management. You set your invalidation points accordingly. You always take partials when you're in profit, and you move your stop loss to your entry. You never let a winning trade turn into a loser. But you also want to let it run if it's going to run. So you put your stop loss at your entry, you set your partial levels, and you let the rest run. I never close out 100% of a profitable trade. Now, number 7 goes hand in hand with number 5. Stop FOMOing into trades and stop using market orders. Market orders are a profitable trader's worst enemy. When you enter trades without a plan, you're going to lose more often than not. Actually, most of the time. So you need to be patient, you wait for your levels to hit, and otherwise you don't trade. Number 8 is a pretty important one. You need to learn the different types of market structure, and then you look for them on all time frames. Uptrend, downtrend, sideways range. You use this to develop your trading plan. You always know the high time frame context, the market structure, and you determine your bias before you start scalping. The market's going to spend most of the time in a range. So mark the high and low of the range and trade it accordingly. The same way that the trend is your friend until the end, a range is a range until it breaks. Be aware of the boundaries and use market structure to determine your trading plan and your entries and your exits and your important levels. Number 9 goes along with this. Stop trying to trade against the trend. Continuations of a trend happen way more often than reversals. This goes hand in hand with knowing and understanding market structure. You want to be aware of the high time frame structure. When you're scalping, you'll find so many more opportunities when you look for continuations instead of looking for reversals. A trend only has one reversal, but it has so many continuation points that you could find opportunities at. And number 10 is probably one of the most important ones. You need to understand that doing nothing and choosing to do nothing is an action. You don't always need to be in a trade 100% of the time. Sometimes the market isn't in a good place, or if you're in no man's land, and you need to see that, realize it, and don't force trades. Knowing when to trade is just as important as knowing when not to trade. Time and price are the 2 most important things. That's why they're the axis. You have price, time. Trading is all about knowing when and where. All right, that'll do it for today. Leave a like and a comment below, and let me know what you guys want to see in the future. If you guys would like some more educational content, like some more specific things, go check out the link below for the Patreon. This is my private Discord server. I have a whole section on educational content. So it's definitely, there's a lot of material here, and I don't sell courses because courses make it so the person who sold it to you doesn't have to take responsibility for your results. And that's not what I like to do. I'm not that kind of person. So anyway, check out the Patreon below. Come join the Discord and come learn some things. I'll see you guys next time. Peace.